Hello guys, welcome back to Ride On Academia. We are still looking at the manufacturing account, right? In our previous video, we were able to look at the introduction to manufacturing account, where we just only considered just the manufacturing account to get cost of production, right? Now, in this video, we are going to be looking at the trading aspect, the trading profit and loss aspect of the manufacturing account. All right, so when we merge the trading profit and loss aspect to the manufacturing account, we then have the manufacturing trading profit and loss account. All right, so we have been able to split it. So in this video, we're going to be looking at just the trading profit and loss segment of the manufacturing account. So the format is a bit similar to a trading profit and loss account for a business that buys goods, right, from outside to sell. All right, the business that buy goods outside for resale. Okay, it's a bit similar, although in this case we don't buy goods outside, we don't buy goods from outside, right? So what we have is the cost of production, because we produce that goods we want to sell in our factory, right? So our format, like we always do, the name of our business, right? And then in this case, we are looking at the trading profit and loss section. We know how to address our trading account, trading profit and loss, trading profit or loss, as the case may be, account for the year ended. All right, let's quickly just get that over with, and then we'll bring in our year. All right, now the format, like I said, is similar, right? So we have our currency sign. We want to have our currency sign, then we'll bring in our sales. What we always consider is sales, right? We're bringing in our sales, and if there was any returns inward, like we do, like I said, it's just very similar, right? If there was any returns inward, we have to deduct returns inward to get our net sales, right? And then we consider the opening stock. In this case, we no longer consider the opening stock of goods like we do. We don't consider opening stock of goods like we do in the trading account, where we have to buy from outside, right? What we consider here is the opening stock of finished goods. Finished goods because they have already been produced, they have already been worked on, right? And then maybe in the course of selling, some of these finished goods were not sold during a particular year, right? So they were carried forward to the next year, and then they became the opening stock of finished goods. So those are the goods that are available for sale at the beginning of the year, of the business year. They have already been worked on, they have already been produced, right? So no more processing. So they are the finished goods available in the business, right? We have the opening stock of finished goods. Then the next thing we add, instead of purchases, right? That's one of the differences in this case. Instead of adding purchases like we do when our business buys goods from outside, what we add in this case is our cost of production. All right, we add our cost of production. Many times we add our cost of production, the cost incurred in producing the goods at the factory, right? We add it here to get our cost of goods available for sale. Are we there now? So this is how we do it. And then in the case where we have the market value, all right, of produced goods, if we were giving the market value of produced goods, like I said in our previous video, when giving market value, we try to compare if we have a profit on manufacturing, right? So if we're giving a market value, it means we're going to be transferring our market value to this place. Instead of cost of production, we're bringing in market value of produced goods, right? Now, but we are not giving a market value in this case, so I'm going to be using the cost of what? Production. Are we together? So when we add your cost of production to the opening stock of finished goods, you'll be having cost of goods available for sale, like we do. Cost of goods available for sale, let's use capital letter. So cost of goods available for sale, and then you now will less closing stock. Same thing we do in trading account, right? In the case where we buy from outside, right? So we have less closing stock. In this case, we must indicate finished goods because we have a lot of stock. we have the stock of raw materials, we have the stock of work in process, and we have the stock of finished goods. So you must indicate which stock, all right? So we are lessening closing stock of finished goods to get our cost of goods sold, all right? Then we get our cost of goods sold. So we less the closing stock of the goods we have that were unsold at the end of the business year, right? So when we less, then we get our cost of goods that was actually sold for that year, all right? So when we get the cost of goods that was sold, and then we deduct it from our net sales, all right? From our net sales, we have our what? Our gross profit. I'm going to be adding so that we can have our gross profit. So this is just the basic difference, right? So instead of having purchases, right, here we are having cost of production, right? And then our opening stock is not just opening stock, we have to state which particular stock, all right? And then it followed the same pattern with our trading profit and loss account. So with this, we'll be quickly launching into the trading profit and loss segment, right? Profit and loss now, where we consider other expenses like we do administrative expenses, selling and distribution, right? Now, we're going to be launching into that very quickly for better understanding. Please stay with us. All right, welcome back. Now, as you can see, we are still using the same illustration, right? We're using the same illustration now to prepare. We're going to be preparing for the trading profit and loss session, like I said, of this manufacturing account, all right? So we're going to be using information, and then we'll be using that format, right? We'll be tracking the information that relates to the trading aspect, right? We have information on sales, we have information on opening stock of finished goods, we have information on the depreciation of delivery van, which is a selling expenses, right? And then we still have depreciation of the office equipment, which is an administrative expenses. We have advertising, we have discount allowed, we have office expenses, we have salesman salary, we have carriage inward, although yeah, for manufacturing account, we have office salaries, right? So we're going to be using this information to prepare for the trading aspect, the trading profit and loss aspect of our manufacturing account. So our additional information, back to what we were saying, we have that for rent and rate, right? We are apportioning for administration 30%, right? And then for selling and distribution 20%, as you can see. All right, we have already done that for the factory in the manufacturing account. We're going to be looking at this in the profit and loss account, all right? And then we have our closing stock for work in process. We have already done that. And then finished goods, that's what we're going to be focusing on in our trading profit and loss section. All right, so as you can see before us, we have prepared for the trading profit and loss account, right, of this manufacturing account. We have our sales, there was no carriage, there was no returns inward, right? So we did not adjust our sales value. Now we have our opening stock of finished goods, and then we have the cost of goods produced, no more purchases, right? In this case, what we are bringing in here is the transfer of the cost of production. So we have our cost of goods produced, and then when we add, we have the cost of goods available for sale, right? And then we less the closing stock of finished goods to get our cost of goods that was actually sold, right? And then when we less this cost of goods that was sold from our sales, we get our gross profit. Now we move into the expense. Like I said, many times expenses are categorized into administrative expenses. We can have selling and distribution expenses, right? So for our administrative expenses, we have depreciation of office equipment. Now things that are used in the offices, everything that has to do with the office go under administration, right? So we have depreciation of office equipment, we have office expenses, we have rent and rate as given in the equation to be apportioned 30%, right? And then we have office salaries. So when we sum this up together, we have the total administrative expenses, right? Then we consider the selling and distribution expenses. We have delivery van, right, when they depreciate. So we have depreciation of the delivery van, we have advertising, we have the discount allowed on sales, all right? And then we have rent and rate, right, as given in their portion 20% of that for selling and distribution, and then lastly we have the salary of our salesmen. All right, and then when we sum this together, we have the total selling and distribution expenses, and we less this from our gross profit, right? We deduct every other expenses to arrive at our what? Net profit, as you can see. So with this, we've come to the end of the manufacturing account. All right, don't forget to like this video if it was helpful to you. You can share this video with as many as you can. Subscribe to this channel and click on the notification button so that when new videos are dropped, you'll be notified immediately. And you can also leave your thought with us on the comment section. We'll see you in our next class. Thank you.